welcome to the deep dive. Today, we're tackling, well, a real head-scratcher. A kind of financial paradox, really, pulled straight from the sources you shared with us. We are diving deep into the pay network and the core issue. It's facing this massive price collapse, just brutal.
Yeah.
But at the same time, it's showing user numbers that, honestly, most tech giants would kill for.
It really is a story of two extremes, isn't it? You've got this almost viral growth, super simple concept, mine crypto on your phone.
Right, just press a button.
Exactly. But then you glance at that price chart and, well, if you're holding Pi, it's got to be painful. Agonizing, like you said.
Agonizing is the word. So let's start there with the tough numbers, the financial reality.
Okay.
According to this analysis, Pi Network peaked, historically, at $2.98.
Right, I see that here.
And now, it's trading around $0.28.
Yeah.
That happened fast. During 2025, it's lost, over 90% of its value?
Oof. Yeah, over 90%. Normally a drop like that, well, it screams game over, doesn't it? It looks like a total sell-off.
Exactly. So our mission today, based on what you sent us, is to figure out, is this the beginning of the end for Pi?
Or is it something else? Maybe just a really painful transition, a signal of change, perhaps?
That's the million-dollar question, isn't it?
Yeah.
Can this incredible growth in users actually survive that kind of price demolition?
It's a huge tension.
And just for context, for anyone new to Pi, launched 2019, Stanford PhDs behind it.
Yep.
The big idea was crypto for everyone. Make mining easy, green, simple. Just that daily button press on your phone. No fancy rigs needed.
And that simplicity, that's clearly driven the user growth we're seeing. We'll get into those numbers.
We absolutely will.
But first, yeah, we have to deal with that price chart, the technical side. How do we square that 90% drop with what the analysts are apparently seeing?
Let's do it. Because normally 90% down means panic stations, everyone heading for the exits.
Total capitulation.
Yet these sources suggest the technical folks are, well, they're not panicking. Why? What are they seeing that makes them hold steady?
It's fascinating, actually. The technical structure, they're arguing it's not just a random collapse. They're calling it potentially a healthy correction.
Healthy. A 90% drop. Okay, explain that.
Well, healthy might be strong, but they're pointing to classic reversal signals. The big one seems to be the Bollinger Bands. They've gotten incredibly tight, squeezing right around that $1.34 mark.
Ah, the Bollinger squeeze. Okay. So volatility is drying up. Price is stuck in a narrow range.
Exactly. It's like potential energy building up. Historically, when you see that kind of tight contraction, it often means a big, sharp move is coming, a breakout.
Okay, a breakout.
Yeah.
It could be up or down, right?
Right.
Squeezes don't guarantee direction.
True, they don't. But they're layering another pattern on top of that. They think they're seeing a wick-off accumulation phase.
Week off. Okay, so that implies institutions. Whales.
Precisely. The theory is that this long, boring sideways grind around $0.34, that's characteristic of large players, the so-called whales, quietly buying up tokens.
So while retail might be panicking or just giving up, the big money is supposedly stepping in.
That's the interpretation, yeah. It looks like distribution or abandonment to the average person, but they argue it's actually smart money building positions before an expected move up.
Wow. Okay, if that's true, that's a huge vote of confidence, isn't it? Sticking with it despite the inflation risk the regulatory clouds will get to.
It is. It suggests these players believe in the long-term potential, maybe the ecosystem itself.
Speaking of which, the source mentioned one whale accumulating a massive amount.
Yeah, let me find that specific number. Here it is. Over 376 million PI tokens.
376 million?
By a single entity. Valued at the time of the report around $136 million.
Whoa. $136 million bet. That's not just day trading noise. That's strategic.
Definitely looks like a conviction play on the whole ecosystem succeeding, not just a short-term price flip.
Okay, so for traders watching this, are there specific levels the analysts highlighted?
Yes, very specific. They're watching support closely between 31 cents and 32 cents. That's kind of the line in the sand they expect the buyers to defend.
31 to 32 cents.
Okay, and resistance.
That's sitting between 30 and 38 and 40 cents.
Got it.
So if this wick-off accumulation idea holds and the Bollinger Bands break upwards out of that squeeze,
then the target.
The initial target zone they identified is pretty wide, actually. Anywhere from $0.46 up to maybe even $1.
46 cents to $1. That's quite a potential jump from here.
It is. That's the technical setup they're seeing, the potential opportunity.
Okay, that covers the charts, the technical argument for maybe not panicking just yet.
Right.
But now we pivot to the fundamentals. because
Yeah,
this
all right.
is where it gets even more complex, I think. How can the tech look like accumulation while the price history is so devastating?
Exactly. The price and the project's underlying health seem totally disconnected right now.
Which brings us back to those institutional bets and, more importantly, the user metrics. That decoupling is probably why those whales are interested. They see something building, a network effect maybe, that they believe will eventually outweigh the current price problems.
So beyond that one massive whale, what else points to institutional interest or maybe just broader infrastructure development?
Well, they're definitely pushing for accessibility. They've integrated with BangXA.
Okay, BangXA, that's for buying Pi with regular money, right? Fiat.
Exactly. Fiat to Pi purchases in like over 100 countries. That lowers the barrier significantly for ordinary people.
Makes sense.
They also partnered with on-ramp money, again, just expanding ways for people to get involved and potentially trade.
Any major exchange listings yet? That's
Oh.
usually a big catalyst.
They are on OKX currently, but you're right. The big hope, the big potential catalyst everyone's watching for is a listing on a tier 1 exchange. Think Binance, maybe Upbit.
Ah, okay. Yeah, Binance listing would definitely change the game in terms of liquidity and legitimacy too.
Absolutely. That's
Yeah.
seen as a major potential trigger for price recovery.
But even without Binance, the usage stats you mentioned earlier, they sound almost unbelievable. Let's get into those ecosystem metrics.
Yeah, brace yourself. These numbers are wild. Over 60 million registered users.
60 million.
60. That's a user base most projects can only dream of.
Okay, registered users. But how many are actually active or verified?
Good question. So 19 million users have apparently completed KYC verification.
Know your customer.
Right.
That's critical for moving to the real network.
Exactly. And of those, 10 million users have actually migrated their accounts to the mainnet.
10 million on mainnet. Okay, that's a substantial number. That's 2.2 billion tokens in circulation just from them.
It's definitely not insignificant. And engagement seems to be spiking too. Daily active users, according to the source, jumped from 5 million to 20 million between June and September 2025.
Wow, wait, 5 million to 20 million daily actives in just a few months.
That's what the report claims.
That's huge. That rivals established blockchains.
Mm.
But are they just clicking the mining button, or is there real activity, commerce, utility?
That's the key question for long-term value, isn't it? The source pushes the utility angle pretty hard. It mentions over 80 dApps, decentralized applications running on the network.
ID dApps.
And they point to PiFest 2025 as proof of concept for commerce. Apparently, 1.8 million users used Pi to transact with local businesses during that event.
1.8 million people actually buying things with Pi. That's tangible. It's more than just speculation.
It suggests the P2P, peer-to-peer commerce vision is at least starting to function.
The source also threw out a $1 billion daily trading volume figure. That sounds enormous, especially without major exchanges. Where's that volume coming from?
Yeah, that needs context. The report clarifies that the $1 billion is likely internal ecosystem volume, so transactions between users, within dApps, commerce on the platform itself.
Ah, okay. So not $1 billion flowing in from outside exchanges.
Yeah.
More like internal velocity of money.
Exactly. Still impressive for community activity, shows people are using it within the system, but it's not the kind of external liquidity that directly pumps the price on, say, OKX.
Got it. It shows transactional use, but maybe not broad investment demand yet.
Precisely. Which leads us nicely into the structure they've built, this dual token system. It's meant to be a competitive edge, right?
Yeah, designed to tackle that classic crypto problem, volatility versus usability. But it exists alongside what you call the biggest risk, inflation.
Let's cover the solution first, then the problem. The dual token idea is actually quite clever in theory.
Okay, break it down.
So you have two tokens. First is PGCV, stands for Global Consensus Value. This is meant to be the store of value. Think digital gold.
Right, the one you hold long term.
Supposedly, its scarcity is meant to be protected by mining rewards getting cut over time. A logarithmic halvening creates deflationary pressure, builds long-term trust.
Okay, GCV for holding. What about for spending?
That's PIUSD. This is the utility token designed for everyday stuff, buying coffee, using dApps. It uses some kind of AI mechanism to try and keep its price stable.
Interesting. So the idea is you shield the daily transactions from the wild swings you might see in the GCV investment token.
That's the goal. Separate scarcity from utility. Keep commerce stable.
It sounds like a neat solution on paper.
Yeah.
But
Yeah.
you mentioned the Achilles heel, the tokenomics. This is where things get scary.
This is the big flashing red light right now. It's Arguably the main reason the price is suffering so badly despite all those users, the inflation is just astronomical.
How bad is it? Give us the numbers.
Well, in just 18 months, the total supply apparently exploded from around 1.97 billion tokens up to 5.56 billion.
Whoa. From under 2 billion to over 5.5 billion. That quickly.
Yeah, 5.56 billion tokens. That puts its supply in the same league as some massive established blockchains, but Pi is only just getting started with its open mainnet.
Is it still inflating that fast?
Seems like it. The report mentions plans to release another 400 million plus tokens by the end of this year, 2025.
Wow. So the supply keeps flooding the market.
Right. And that fire hose of new supply risks overwhelming any demand generated by those 20 million daily users or those ADD apps. It makes it incredibly hard for the GCV token to act as a store of value if it's constantly being diluted.
The supply monster just eating the demand growth. Okay. Beyond the tokenomics, what other hurdles are there? You mentioned KYC earlier.
Yeah, the KYC process is still a major bottleneck. Getting those 60 million registered users fully verified and onto the mainnet is crucial.
What are the specific problems?
Users report confusion over required documents, problems with the facial recognition tech, and just really slow manual reviews if the automated system fails.
So you've got potentially tens of millions of users stuck in limbo, unable to fully participate.
Pretty much. If only 10 million out of 60 million are on mainnet, that KYC hurdle is significantly limiting the network's potential liquidity and utility right now.
Is there a plan to fix it?
Yes, the upcoming Protocol Connie 3 upgrade is supposed to tackle this directly. They're planning to introduce Linux-based nodes and, importantly, decentralized KYC methods.
Decentralized KYC. Interesting.
If they can streamline that process with Protocol 23, it could unlock a huge wave of users and activity currently waiting on the sidelines.
Okay, one last hurdle. The regulatory cloud. What's the specific concern there?
It comes down to their growth model. The referral-based mining. It's been super effective for user acquisition, obviously.
Right. You invite friends, you earn more.
Yeah. But the concern highlighted in the source is that regulators in some countries might view that model as, well, a pyramid scheme.
Ah, that's a serious flag.
It is. That lack of clear regulatory standing, especially in major markets, is a significant risk hanging over their global adoption plans.
Okay, so summing all this up, bringing it back to you, the listener, maybe the learner who provided this, we've got this crazy mix, 90% crash, whales buying, 60 million users, but crippling inflation and tech bottlenecks.
There's a lot to unpack.
What's the strategic takeaway from the analyst? What should someone do with this information?
Well, the overall advice leans heavily towards caution, but it depends on your time frame. For short-term traders, it's purely a technical play based on those levels we discussed. Maybe try to enter around $31,000.32 support, aiming for that $46.60 target area if it breaks out. But use a tight stop loss, like 0.30 cents, because the risk is obviously high.
Makes sense for a trade.
Yeah.
What about long-term believers? People who got in early, mining on their phones?
For them, the message is patience. Extreme patience. The analysts strongly suggest waiting for concrete proof on two fronts.
Which are?
One, real sustained traction in the ecosystem, meaning utility growth actually starts outpacing inflation. And two, significant progress on the regulatory front. Get some clarity there.
And in terms of allocation?
Given the risks, especially inflation, they recommend keeping any Pi position very small for now. Maybe 5% of a total crypto portfolio, maximum. Don't bet the farm.
Okay, so it really all comes down to execution for the Pi team.
Yeah.
Let's list the absolute must-win battles for them. What are the key milestones everyone should be watching?
Based on the sources, there are 5 critical things.
Wow.
Successful launch of Protocol 23. They have to fix that KYC bottleneck.
2.
Major exchange listings. Getting on Binance or Coinbase is probably essential for real liquidity. Real growth in DApp usage and commerce. Utility has to accelerate demonstrably.
4.
Regulatory clarity. They need to resolve that pyramid scheme question in key markets.
And the big one, 5.
Get the tokenomics under control. They need to show they can manage or somehow offset that massive inflation.
Right. Hit those 5, and maybe they pull out of this dive, miss them, and that 90% drop might just be the beginning.
Pretty much.
So we started asking, failure or transition? I think our deep dive suggests Pi is balanced precariously at an inflection point. It's not dead yet.
No, definitely not dead. Those user numbers, the whale accumulation, the 60 million people, that's a foundation few projects have. It offers real hope, but yeah, high-risk hope.
But those hurdles, inflation, KYC, regulation, they're huge. They demand, like you said, extreme caution and patience. Success is far from guaranteed. It really depends on hitting those milestones.
Absolutely. It's all about execution from here.
Which brings us to our final thought, something for you to chew on after listening. The whole point of Pi Network, its stated mission, was to bring crypto to the masses, right? Easy phone mining for adoption.
Crypto for everyone.
So here's the core tension for the future. They've achieved massive reach, 60 million users exposed to crypto, many for the first time. That's huge for adoption.
It is.
But can that adoption, the actual real-world use, the commerce, the dApps, can it possibly grow fast enough to soak up all that inflationary token supply?
That's the billion-dollar question, isn't it?
Will Pi become a genuine, widely used currency? Or will it remain mostly a speculative asset, constantly fighting against its own overwhelming supply? Can adoption truly outrun inflation?
That will determine its ultimate fate. A fascinating case study. Thanks for bringing these sources to us for this deep dive.
Indeed. And just a reminder, as the source material also emphasizes, cryptocurrencies are high risk. Prices swing wildly. You could lose money. This was analysis, not investment advice. Be careful out there.